All right. Let's also welcome in our market guru today. We've got Shiv Puri joining us this morning, Managing Director at TV of Capital Advisors. Shiv, good to have you with us. A lot has been happening since we last spoke, and we've had a lot of global developments, and now we're in the thick of earnings. So let me just start off with first, just where you feel we're placed right now. How risk-averse do you feel investors are at the moment? Are we in wait-and-watch mode, or is this just a consolidation phase that we're seeing right now?
Well, I think the markets are in probably a consolidation phase, and the reason for that is predominantly the fact that earnings of corporate India have yet to catch up. And I think that there are really just three factors domestically that are playing on that. Number one is that the rural part of the economy hasn't picked up yet. And I think a large part of that is because of the cut in subsidies. So spending there is weak. The second is, monetary policy is still tight. We're probably one of the only countries in the world that have a 300 basis point real rate of inflation, or real rate of interest. And the third is that, the infrastructure cycle hasn't picked up for a whole host of reasons, but in no small part because the PSU banks don't have the balance sheets to lend. So because of that, I think some of the growth has been, pickup has been pushed out. And as a result, earnings have yet to catch up. So until that happens, the market is probably in a consolidation phase. There are certainly some global factors, Greece, of course, one of them, but I think China is much more serious if there was an issue to happen out there.
Okay, so let's take a look at, what kind of strategy you would advise then, also domestic triggers right now, Shiv, to what extent do you feel that, have helped to insulate us from what's happening globally? When it comes to monetary policy, for instance, when it comes to what we're seeing on the ground in terms of a pickup in growth or the capex cycle, to what extent do you feel that we have enough going right now to keep us sort of resilient?
I think a lot of the issues to keep us resilient are largely in our control. The issue is that the implementation is still to be done, and I would say that the direction is correct, but it's taking perhaps a little longer than we would have hoped. But the global factors are, I think the only key global factor that can be of risk is probably China. I think Greece is less of an issue, and I think if we look back over the last 3, 5, even 10 years, there's never been a year where there hasn't been some sort of a global issue. Perhaps not as serious as the financial crisis, but there's always 2 or 3 global issues. For some part of that time, India was doing well, growth was good, and then some part of time, largely through the own undoing, it slowed down materially. So I think there are certain things in terms of the reforms. The GST bill, I think, is very big. Land acquisition bill, I think, is very important. And certain steps that hopefully are going to show higher growth in the economy.
Sure, now you're talking about the way the setups are really panning out for markets going forward from here. But in regard to ideas, in regard to themes to focus on in this market, what would you really be betting on?
In terms of particular sectors, I would say that the areas to really focus on would be the financial services sector still, especially the private sector banks. I think there's a massive shift going on in the banking sector. And there are really 2 reasons for that. One is that the state-run banks have, of course, a troubled balance sheet, which we all know. But the second thing that is more long-term is that there is a huge sort of improvement in technology that is coming into the banking sector. And I think some of the state-run banks have a lot of work to do to catch up. The private sector banks have leapfrogged by and large. And so I think for these 2 reasons, you're going to see this market share shift continue towards the private sector banks, and as a result, they're going to grow a lot faster than the overall banking system. The second sector we can talk about is the healthcare sector, which is really the pharmaceutical sector. I continue to believe that healthcare sector, especially the pharmaceutical sector, is where the IT services sector was, maybe 10 or 15 years ago. India has developed some fantastic chemistry skills, and we are starting to see the Indian companies in the generic space become big global players. And I think that trend has a long way to go. And these recent sort of corrections, if you will, because of US FDA inspections and things like that, I think are just opportunities for that to happen.
What about the entire capital goods, infra, the entire development play, Shiv, given that there are expectations or a lot of optimism that we will see the capex cycle pick up, and perhaps the time is now to get into some of these areas of the market? Would you agree, or would you stay away given the high leverage that we do see in some of these counters?
Yeah, I think one of the learnings over the years has been that it always pays to be in really high quality businesses. Okay. And quality is really defined as companies where there is a high return on investment, where they have really great management teams that have been able to manage their balance sheets and capital allocation well, where there's some barriers to entry, things, and these kind of metrics are very difficult to find in the infrastructure sector, by and large. And so while it's a very important part of the economy, as an investor, one may not benefit by being a minority shareholder in some of these companies. On the capital goods side, there are still companies out there that fit that criteria, but I would still say that the valuations on some of those companies already account for a pickup in the infrastructure cycle, and we've yet to see that play out.
The other important bit out here has been some of the other sectors and some of the other areas of the market, like the auto pack as well. We've seen quite a bit of stock-specific action. Don't want to get into individual names out here, but when you talk about the auto pack, what's your thought of that?
Well, in terms of the auto pack, there are really two components to it. There's the auto companies, and then there are the auto components companies. And I think the component companies are doing very well. And a large part of that is because of the global market. So there are companies that really specialize in one or two areas, have built the scale on a global basis, and there is some barrier to entry in that business. And they probably are doing the best in terms of manufacturing exports in India. So, that part is doing well. And also an important thing is globally, the auto components companies have consolidated. So there are fewer suppliers, and that gives them some pricing power. Coming back to the auto companies, I think it really depends on, again, you have the car and the two-wheeler market. The car market is doing a little better. The two-wheeler market, not so. And, the reason for that is it's largely dependent on the rural economy, which is still weak.
Just one more thought on the other sector that's been in focus now that you've got that Iran deal, somewhat concluded. The point here is the domestic oil and gas space, so keeping a close watch out on that. On one hand, you would have the global impact on oil prices, but beyond that as well, you would have a lot of benefits coming in for some of the local refiners. Is that a play that you would be working with, at least from a, let's say, medium-term point of view?
Well, I'd say that if one has to look at the decline in global oil prices, which is humongously beneficial for India across the board, there are probably better areas to look at than just the refinery companies. I'm not the expert on the refining space, so I can't really specifically talk about that. But whether you look at the auto sector that we just talked about or banking that we talked about earlier, I think these areas benefit tremendously with oil being at, $50 a barrel.
All right, Shiv, we'll leave it there. Thank you so much for joining us this morning on Market Guru. Good to have you with us. Before we